Good morning, everyone. Just going to give everyone a couple of minutes to get logged in and join us before we get started. All right, I think we'll get started now, Harold. Good morning, everyone. Thank you for joining us for our virtual first-time homebuyer seminar. My name is Alberto Rosario. I am the Director of Branch and Sales here at Palisades Credit Union. If this is your first homebuyer seminar with us, our presenter, who I'll introduce in a moment, is here to provide you with some hopefully valuable information that you can take with you and better prepare you for the road ahead in your search for your new home. He's going to go over things like what to expect from your lender, what your lender will expect from you. He'll discuss some do's and don'ts of while preparing to buy your first home. I myself, I just completed my first year in my new home. So as a first-time home buyer myself, I'm sure I'm going to hear a lot of the same questions that I had for Harold this time last year. So please, I encourage you, take advantage of Harold's expertise and experience in this field. Whether you think of the question this morning or whether you think of it along the way while you're searching for your new home, please give us a call. We're here to help. Before introducing Harold, who's our mortgage loan originator, let's get some housekeeping items out of the way. So let me pull up my notes and all right, so just to ensure clear communication and so that Harold is able to share as much information with everyone this morning, we will pause in between segments to go over any questions and answer any questions you have. We ask that you use the questions feature located on the right of your screen to enter any questions you have. You can enter them in throughout the presentation. We'll pause. I'll give you a moment to locate that. If you want to take a look over on the right-hand side, you should have maybe 4 icons. One of them is a question mark. That's where you'll enter your question. There are 5 segments to the presentation. Following each segment, I'll read the questions. Harold will answer. Just to give you an idea of the time frame, the seminar typically runs minus the questions, maybe 30, 40 minutes, depending on the questions, could be anywhere from an hour, 15 minutes. So that's the timeline that we're looking at this morning. Now, depending on the volume of questions that we receive, in the event that we're not able to get to some of the questions this morning, Harold is available to discuss them with you by phone, by email, or in person. Harold's contact information is provided in the presentation. There's a downloadable copy of the presentation located in the tab directly below the questions icon that we just pointed out. So I think it looks somewhat like a notepad. Should be the fourth icon down. So if you're able to, please download the presentation. It's a lot of information in there. If you're not able to download or save the copy, no worries. We have you covered. We'll email a copy to you by the end of the week. So all the registrants will get that via email. I think, well, next item, I trust you all know where the food, refreshments, restrooms, and fire exits are. So we'll skip that. And with that said, Harold, I'm going to turn it over to you.
Thank you, Al. Can everyone hear me?
I can hear you on this end, yeah.
Great, great. Welcome, everyone. Welcome, everyone. And like Al said, this is our virtual home buying seminar. And I just want to welcome everyone again. And with that, let's go ahead and get started. Like Al said, I'm Harold Willis. I'm the mortgage originator. I've been with Palisades Credit Union for about 3 years. And Palisades has been in business for over 75 years. And it's been a pillar in the community, continually focused on providing members with an experience paired with a suite of financial products and services. We currently have 3 branches that are in Orangeburg, New City, and Nanuet. Our membership at Palisades is open to anyone who lives, works, volunteers, or study in Rockland County, New York, or Bergen County, New Jersey. And just a little bit about myself. I've been in the mortgage business for a little over 20 years, and I grew up in a little town called Somerville, South Carolina. My parents were both school teachers. My mother was a librarian. My father was a school principal, and they instilled in all of us about community and giving back to the community and helping out the community. So this is, I guess, doing my part to help out the community, and especially getting pleasure in putting someone in a new home. We're going to go over, like Al said, about 5 topics. Number 1, it'll be deciding when you decide to buy your home. Next, qualifying for a mortgage. Then the home purchase process, and a few know before you go. And then finally, we'll go over the closing process, and that's when you take possession of your home. Okay, so when you decide to buy, there are certain things that you need to look at when you're buying a home. So one of the things is, what type of home are you looking at buying? Is it a single family home? Is it a 2-family home? Is it a condominium? How many bedrooms do you want in that home? Depending on your size of family, it becomes very important on the number of bedrooms in the home. How many bathrooms do I want in a home? I know it can be pretty tricky if you only have 1 bathroom in a home and you got 3 or 4 people. So that's very important in when you're looking at deciding to buy a home. Is it move-in ready, or does it need updates? Some people like to buy homes that are ready to move in, or other people, to save money, they may buy a home that may need some work on it to be able to save some money, and they may like fixing up a home. So that's also an item to look at when you're buying a home. The age of the home. Do you want a new home, a newer home, or do you don't mind buying a older home, and that comes in maybe with fixing up as well? And also the square footage in the home. If you're a couple starting out, you may not need a bigger home, like if someone who has a family with 2, 3, 4 kids. And also the square footage of the home is going to partially determine on how much that home is and how much it's going to cost. So what am I looking for in a home? Choosing a location. So when you're looking to purchase a home, you look at certain things that encompasses that in buying that home, such as what type of community do I want to buy in? Some people who may be in 50, 55 years old may want to buy into an adult community, or some people may want to buy in a gated community. So you need to determine on what kind of community that you want to buy in. The school district, especially if you have kids, the school district becomes vitally important, and you can do your research on the school districts within the community that you're buying. Also, crime statistics. You also want to look at that when you're buying a home, and as well as suburban or urban. Do I want to live in a more country type setting, or do I want to move into a city type setting? Younger people may want to live in a more city type setting, where people with kids and may want to move into a more suburban area. And another big thing is flood zone. When you're purchasing a home, you need to really look at if that community is in a flood zone, because if it is, then you're probably going to be able to, you're probably going to be required to purchase flood insurance. And that could add to your expenses, because the flood insurance can get pretty expensive. So that if you're near some water, certainly if you're buying on the beach, you're probably going to need flood insurance. But certain inland properties, if they're close to water, they may be required to get flood insurance. And another big thing is property taxes. Property taxes can get pretty hefty if you're buying here in Rockland County, and so you want to research on what are the average property taxes on the home that you're looking at purchasing. Another thing you want to look at is finding a comfortable payment that fits your budget, and that's where a mortgage originator can help you in determining what a comfortable payment would be for you. But for you to look at that, you need to look at what liabilities you have, what payments you have, to be able to calculate that. And also the type of home will a lot of times determine on how much your payment's going to be, and also how much of a down payment is needed on that home. Right now with Palisades Federal Credit Union, our minimum down payment is 5%. So if you put down 5% versus say 20%, your payment is going to be higher. So you need to look at that in determining what's a comfortable payment for you, monthly payment for you for that mortgage. And also with the down payment, sources of down payment. And what I mean by sources of down payment is, where's the down payment coming from? Do you have the funds yourself for the down payment on the home? Or you can get gift funds from family members to be able to help you with the down payment and closing costs. And also, people sometimes use their 401k to use for the down payment. So these are the things that go into finding a comfortable payment, monthly payment on your mortgage. Okay, we're gonna take a pause here and see if anyone has any questions.
Hey, Harold, I don't see any questions just yet, but I'll get us started and maybe ask a couple of things that you just went over.
Okay.
Can you hear me? All right.
Yes.
In terms of the taxes, so you mentioned that's one of the items that I know I definitely looked for last year when I was looking for my home, and actually the year before that. How do taxes affect the closing costs?
Well, taxes don't affect the closing costs per se. Taxes just go into what we call your debt to income ratio. And say, for instance, just for simplicity's sake, your payment is on your mortgage $1,000 per month. And then the taxes on your home is $12,000 a year. That would add another $1,000 per month to your mortgage payment. So you're looking at a total of $2,000 per month. Now, if you do what we call escrow, and what escrow is that you include your taxes into your mortgage payment. So there's two ways you could do it. You could pay your property taxes on your own, or you can include them in the mortgage. So if you include them in the mortgage, then we would have to collect a certain amount up front to start your escrow, and then that could add to your closing costs. So so say for instance your taxes are $12,000, we may have to collect $4,000 or $5,000 up front, and that would add to your closing costs.
All right, thank you, Harold. We do have one question that just came in. The question is, are you penalized for taking out a 401k loan for a down payment? Does the 401k loan have to be paid back?
Well, that's up to your I guess who holds your 401k. If you take a loan on your 401k, then yes, you would have to pay that back. If you take a disbursement, that means that you're taking a disbursement from the 401k. You're just taking a lump sum out of your 401k, and you do not have to pay that back. So if you're taking a loan on your 401k, then you would make monthly payments to pay that back. But if you take a disbursement on your 401k, then that would just be some whatever fees or penalties for taking those funds out early. But then there are different calculations. If you're over a certain age, I believe if you're over 55 or I think it's 59, you have to check with who holds your 401k. You would pay less of a penalty in taking a disbursement on your 401k.
All right, thank you, Harold. Just to piggyback off that is something that I also looked into last year. So I had that same exact question last year. And as Harold stated, you want to reach out most likely to whoever holds your 401k, their assistance helpline or your HR department, and just see what some of those details are. I think that there may be an option in there for first-time home buyer purchase, but I would lean on whoever the 401k is with, your employer, and see what they advise. One question for you though, Harold, on that. If this person decided to take a loan on a 401k, is that something then that also affects their debt to income ratio? So is that going to come up on the credit report?
That's a very good question, Al. And yes, so if you take a loan on your 401k and say your payment is $50 per month to pay that back, then yes, that $50 per month is added into your debt to income ratio and in qualifying for the loan. That's a very good question, Al.
All right, let me check to see if there's any other questions here. Okay, we have another question. Do you offer the Achieving the Dream Homebuyer program as well?
Yes.
With closing costs.
Could you repeat that again, Al?
Do you offer the Achieving the Dream Homebuyer program as well? I know this helps with closing costs.
Yes, we offer the Achieving the Dream Homebuyer through First Home Loan Bank of New York, and what they offer is up to $14,500 in closing costs and down payment assistance. There are certain qualifications that you have to meet, such as you have to be I believe 80% of the median income of the county that you live in, either Rockland or Bergen County, and that's household income. So they'll supply up to $14,500, and you also have to go through a first-time home buying class to qualify for those funds. And there are a few other qualification things that you have to meet, but to get more information on that, please give me a call or email me, and I can get you some more information on that.
All right, give me 1 second. We have a few questions that came in. Is 100% funding available from the PFCU? And also with 5% down on a home, does that require PMI?
Yes, 100% financing is not available. We can go 95% loan to value, which is 5% down, and PMI, private mortgage insurance. Some people call it mortgage insurance. You will have to get mortgage insurance if you put down less than 20% down, and and your credit score plays a vital part in how much that mortgage insurance is. So we're going to talk a little bit more about credit right after this, but yes, you will be required to have mortgage insurance.
We have a tax question. I'm not sure if this is something that falls into the, let me see what this is. So if with less than 20% down payment, I guess the question is, do they have to pay taxes out front? But I think that may, you can touch on this. I think that may vary depending on whether the taxes were already paid and what the agreement is between the buyer and the lister.
Yeah, I mean, if you're talking about the property taxes, yeah, that would be between the buyer and the lender. I'd like to get more into that question. Maybe they can, the person who sent that question can give me a call or email me, and I can give you a call and discuss that further with you.
Okay, I'll get in one more question. We do have quite a few questions on this first section, so we'll keep a copy of all the questions and try to get to them at the end. So next question, this will be the last one for this segment, is with escrow. So do first-time home buyers need to put the taxes into escrow the first year? And if they don't, is that something that they can do later on?
You're not required to escrow. Certain people like that because they want to make their mortgage payment and know that their taxes, we take care of paying their property taxes. And some people, they like doing it themselves, but no, we do not require you escrow at this point.
I'm not sure. Let me see if I can get this question in, and maybe they can, unless you have an answer for this. So the question says, what percentage of income should go towards a home? And I think you touched on that a little bit when you were sharing debt to income ratios.
Well, the typical cutoff for a debt to income ratio is 45%. So, and that's total debt to income ratio, where that would be your mortgage payment with your taxes, property taxes, your homeowner's insurance, and any other liabilities you may have out there, where it's, car payment, credit card payments, monthly payments. But to answer your question about the home, I would say a home maybe about 20% debt to income ratio, but then you got the other liabilities in there to add in, such as I said, the property taxes and any other debt, monthly obligations you have.
Okay, yep, he rephrased the question, and I think that's what he was looking for.
Right.
So I'll keep track of any questions that we didn't get to, and maybe we can get to those towards the end. So we can continue with the second segment.
Okay, thank you, Al. So the next segment is qualifying for a mortgage. So one of the biggest thing, if not the biggest thing, is in qualifying for a mortgage is your credit score. And as you see on the slide, credit score can be anywhere from 300 to 850. So 850 is exceptional. 740 to 799 is very good. And you see the other credit scores. And what can have a positive impact on your credit is consistent and current payment history. So that means that you're making your payments on time and you're being consistent with that. If you have, say, a 1 times 30 or 2 times 30 on a credit card within, I would say, 12 months, then that's going to negatively affect your credit. So our minimum right now is minimum credit score is 620. And so, but like I said earlier, if you're going to need to get PMI mortgage insurance, then you want a higher credit score because your credit score is going to impact your payment on your private mortgage insurance. Also, what has a positive impact on your credit is multiple sources of credit, credit cards and loans, and a long track record of responsible credit. So what goes into a qualifying for a mortgage as well is you want to find a lender. And what you want to do is you can compare rates with different lenders. You can compare our rates with other institutions to see where we stack up in the mortgage rates. Also, in finding a lender, you can ask family and friends, see what kind of experiences they've had with people who currently have mortgages. And you can also do your research. You can go online. Everything's online these days, so you can go online and check out the lender's reputation, and also can look at what type of programs the lender has. So, do you want a 30-year mortgage? Do you want a 15-year mortgage? Or some people may want to take a 20-year mortgage. So we have here at Palisades Federal Credit Union, we have a 20-year mortgage, a 30-year mortgage, and a 15-year mortgage as well. So the next item in qualifying mortgage is that you want to get what we call a pre-approval. And what that is that you would go to a lender, hopefully you come to us, and we would see how much you would be pre-approved for. And most lenders in Rockland County and Bergen County, before they start taking you out, real estate agents start taking you out to see homes, they're going to want a pre-approval. And what that does is, say for instance, you're looking to buy a home for $350,000 to $400,000. So what we do, we would put in that information in the system. The first thing we would do is pull your credit and see what your credit score is. We would put that information into the system on the potential, how much the home is going to cost, how much you're going to put down, how much the property taxes are per year on that potential home, and also any other monthly liabilities that you may have, like I discussed earlier, any car payments, credit card payments. We put that all together, so to speak, and then we would look and see if you are qualified for a pre-approval for that loan amount you're looking at. So what we would do is review your credit, income, down payment, and after we do all that, everything's fine. Then we would get you a pre-approval letter that you would take with you to the lender. Or if you're buying from a private person, then they would probably want a pre-approval as well. So you have something in hand to show that you're qualified for this mortgage, and you know, and you can submit your pre-approval to that person or to the real estate agent. And also, these are the items that we need for when you're qualifying for a pre-approval and qualifying for your mortgage. We would need your last 2 years W-2s. We would need your last 2 years federal tax returns, all schedules. We would need your two most recent bank statement, all accounts that you're using for the mortgage transaction, all pages, even if it's junk pages. If it says 1 of 30, then we need all 30 pages, no matter if they're junk pages as well. And we're going to need your most recent pay stubs up to the 30 days of income. Also, if you own a business, we're also going to need your profit and loss statement from that business if you're self-employed, and plus any corporate tax returns that you would use if you're running a business. Some people use it as a sole proprietorship, and that would be in your regular federal tax returns. But if you're using like an 1120, 1120S corporation, then we would need those corporate tax returns as well as your federal tax returns. Now, for people who are retired, we would also need, if they're using Social Security or pension income, we're going to need your Social Security award letter to show what you get monthly, as well as your pension award letter to show what you get monthly if you get a pension. And if you're refinancing, we're going to need your homeowner's insurance policy and your mortgage statement and your property tax receipts. And that's only if you're refinancing, but you know, we're mainly talking about home buying today. Any questions on this segment?
Yep, Harold, we have a few questions coming in. Give me 1 minute to pull that up.
Okay, thank you, Al.
Okay, debt to income ratio you just went over. What is I guess the question is, what is the 80% median for a family of 3 in Rockland?
I believe and it changes. I believe it works out to be about 85,000. I'll get the exact number on that, and that's household income. So if you know, even if only one person on the loan, but another person lives in that household, we still have to count that income. So it's total household income. And I'll get the exact number on that, and we'll publish that, Al.
Okay, thank you, Harold. How much do property taxes increase over time?
It really depends.
That's a tricky one.
It really depends on the community. You know, I've had people who we have mortgages with, and they're escrowed, and their escrow payment went up because their property taxes went up. So it really depends on the community. I can't tell you it's going to go up every year. People think property taxes are going up every year, but you know, it definitely can change on you. But you know, I couldn't tell you, you know, how often that would happen.
All right. Does a pre-approval letter, well, is a pre-approval letter considered a hard inquiry, and can it lower your credit score negatively impact your score?
Yes, it is a hard inquiry, and typically when we pull credit, your score can go down from 3 to 5 points. And so say for instance, we pull your credit and it goes down 3 to 5 points, which is not that much. And you're rate shopping and another institution pulls your credit, it won't go down on the second pull because it's what we call a like occurrence. So if we pull it, it goes down, or somebody else pulls it, it goes down 3 to 4%. And you decide, you know what, I don't like their rate or what have you, and you want to come to Palisades and we pull your credit, then it will not go down, and because it's a like occurrence, and it won't do that for a window of 60 days.
Okay. Can your pre-approval amount be different dependent on the lenders, on different lenders?
Yes, if I understand the question, if can your pre-approval be different? Yes. What I tell people is, say for instance, we do a pre-approval for you for $400,000, and you find a home for $350,000. So I wouldn't submit that $400,000 pre-approval. We could just redo it because you already pre-approved at a lower amount. We would reissue you one for $350,000. So we can change the amount on a pre-approval if we need to. So I don't know if that answers the question.
Yeah, I read it as I guess depending on which lender they go to, maybe we pre-approve them for, you know, 350,000. Someone else will say, no, you're pre-approved for 375,000.
Yeah, I mean, it could vary. I mean, you know, it really depends on the lender.
So I do have a question here that I think will be better suited as maybe a actual discussion and conversation. So I'm going to ask this person to reach out to Harold and maybe go over some different scenarios. The question that came in has a lot of details in this specific scenario, where if the FICO score is X amount and they make X amount a year and they have a car loan for 10 months, it's pretty specific. I think that you'd have to actually look at the numbers and maybe ask some questions of this person, Harold, and try to give them the best advice.
Okay, thank you.
Give me 1 second. I'm sorry for the wait. Back to the, we have a lot of questions that came in, which is good.
Oh yeah, love it, love it.
Okay, someone was asking for your email address. I did provide the email address in the questions box, and I sent that to everyone. Harold's contact information is on the presentation, which again, you'll find over on the right hand of your screen. You'll see maybe a notepad or a letter pad, maybe 4 icons down. Presentation is there. His email address is going to be towards the end, and we will email a copy of the presentation to everyone, but I did provide your email address to everyone inside the questions box. There was a question about the DREAM program. Again, I'm gonna, unless you want to go a little bit more into detail on that, I know there's a section where you touch on that later on. So if we want to maybe hold this question, I think they're just looking for more information and more details. So we'll save that for that segment. If there's anything additional that you didn't cover at that point, then we'll circle back.
Okay.
All right, I think we're all set with the questions.
Okay, thanks, Al. Our next item, segment, is the home purchase process. So in the home purchase process, you have your initial consultation. You go to an application phase, processing, underwriting, initial disclosures, you go a commitment letter, you go to a closing disclosure, signing day, and funding day. So, I'll be going through these items in the home purchase process segment. So the Palisades Advantage. Palisades offer low rates for the 15-year, 20-year, and 30-year mortgage. Our closing costs are very competitive, and we give a step-by-step guide through your home buying process. And like I said, mentioned earlier, you can, with the Home Buyer Dream Program, you can get up to $14,500 for down payment and closing cost assistance. Now, there's certain things we need to know before you go. So these are dues that you want to do when you're purchasing a home. So you can check out what your credit score is. I know that the annual credit report offers, I believe, a free credit report, I believe twice a year. And if you see the website to go to get your credit report, then you can go there and get a free credit report. The other institutions like Experian and I think Equifax, that you can look and see what your credit score is, and they also can get you what your monthly payments are on a credit report prior to going to a lender. And some of these are not hard pulls, so they can be a soft pull where it doesn't affect your credit. So you have to research and see what's best for you. And also planning. Before you start buying a home, looking at purchasing a home, you may need to save up for your down payment and closing costs. You can also, like I mentioned earlier, is gift funds from family members. You can use that also for help with down payment and closing costs. And you want to make sure that your down payment and closing costs, if it needs to be liquidated from, say, a 401k or things of that nature, you need to do that 7 days prior to closing. Also, stay organized. Keep all your financial statements organized, up to date, because we're going to need those documents in the home buying process. And just keep all your records, and just make sure vital is keep paying your bills on time. That's very vital in your credit score. And also, you can contact me or contact your mortgage loan consultant in making any changes in your finances, because if you make changes in your finances, like buy a new car or take out any additional debt, that will impact your debt to income ratio and will impact how much you can borrow. So here's some don'ts that we look at when you're purchasing a home. For any new loans or credit card, even if you're pre-approved. So if, say, I get you a pre-approval, you don't want to open up any new debt or do anything like that. You want to refrain from making any large purchases, because after you get pre-approved, if other liabilities show up on your credit, that will impact your debt to income ratio and could impact how much you can borrow. Do not transfer or increase credit card balances. Don't leave your financial institution, because if you close out an account and move it to another institution, then we have to follow that paper trail, and that could be also disruptive in the home buying process. And also avoid from making any employment changes for moving from one job to another, because that can also impact your borrowing power as well. So if you work on one job and if you move to another, then we have to probably requalify you based upon that new information. And if you move from one job within a certain industry and you move to a different industry, that can also impact you as well, because we need to have at least 2 years employment history. And if you move to another industry, then we may need another 2 years in that different industry that you're moving to. So these are some don'ts that you need to look at as far as the home buying process. So this is just some mortgage lingo. I'll go through a few of them here. We spoke about credit score. We spoke about down payment. We can look at the sales contract. So if you look on the side there, you see sales contract. And what a sales contract is that when you purchase a home, you and the seller will sign a purchase agreement, and that will outline everything regarding that purchase, the purchase price of that home, the down payment that you're required to put down with that seller. Because sometimes if you're putting, say, 20% down, the seller may want a 5%, what they call earnest money. If you look over down there, you'll see earnest money. And what that is that the seller will say, I want 5% up front from you. And it could be 2%, 3%, it depends, to show that you're serious about buying that home. And if you put the earnest money down and for some reason you decide not to buy that home, you could be liable for that earnest money. They may be able to keep that earnest money that you put down if you decide to pull out for whatever reason. So just be careful, and you'll get an attorney typically to go over the sales contract and all the language within the sales contract for that purchase of that home. Also, some other mortgage lingo. The deed is a legal document that transfers property from one owner to another. So when you purchase that property, the deed is a legal document that says that ownership goes from the seller, who's A, to the buyer, which is you, B, and that's recorded. That deed is recorded at the county building in your specific county. Also, we can look at what your title is, and that also is an official document. It just shows the ownership of the property. It just shows this person owns this home, and that's also recorded at the county building in the county that you're purchasing in. And also, if anybody have any questions on those, on the mortgage lingo, we would also take those questions as well. Okay, we're on to the closing process. Any questions on what we just went over?
We have a few questions from what we just went over, and then some that I think we have some time to get to from the previous segments.
Okay.
One of the questions is, when taking a credit score into consideration, is that FICO or another calculation?
It is. Well, what we do is we pull 3 credit reporting agencies: Equifax, Experian, and I believe FICO. And what we do is take those 3 scores, and whatever is the middle score, we use that FICO score as your credit score for qualifying purposes, if that answers your question.
I'm not sure if you have what the rates are as of this morning at PFCU. Someone's asking what the interest rates are now on mortgages.
Interest rates on as of Friday, close of business, was 3% on a 30-year mortgage, 2.875% on a 20-year mortgage, and 2.750% on a 15-year mortgage.
Thank you. Once qualified, how long is the pre-approval letter valid for?
90 days. It's valid for 90 days. And if you didn't find a home within this 90 days and we just need it updated, what we would do is we would just get updated information on you, updated pay stubs, and we may have to re-pull credit, where I think the credit is good for 180 days. So we probably wouldn't have to pull credit, but we would have to get updated pay stubs and to update the pre-approval.
Is there a limit as to how much a person can receive in terms of a gift fund?
You can get up to 100% of the down payment and closing costs in gift funds. Now, in certain instances, you may have to put down 3% of your own money, but we can talk offline on that. And there's certain instances, but I'd rather take that one offline. But typically, you can get up to 100% of down payment and closing costs from gift funds.
Okay, great question. That's definitely one of the questions. I would say probably 99% of these questions are questions that I had last year, and the other is probably something I should have thought of that I didn't last year. They're all really great questions.
Yeah, very good questions.
I think this one you already answered, 100% funding available. Okay, so here's a question. If the owner selling the house is asking 80,000, so they're selling the house for 80,000, but we pre-approved the borrower for 100,000, can they keep the rest of the loan for repairs?
No. What that is that we do what we call conventional loans, and whatever the purchase price is of the home, we can't lend over that. And what you're probably alluding to is what they call a rehab loan, and that's through the Federal Housing Administration, FHA loans. Right now, we don't offer that loan, but if you need a loan of that nature, then I can give you some information on who to go to get that type of loan, because a lot of people are buying up what they call fixer-uppers, and if that house is not move-in ready, then it's going to need probably what they call a rehab loan from the FHA.
Okay, great question. We have another question. We have a few more to go through here. I just want to make sure that I get to everyone since we have some time. If denied pre-approval, will my credit get pulled while working on the issues? So are we going to re-pull the credit?
No. Unless you want us, and because if I pull your credit and say you're below the minimum score of 620, and you're working on the credit to get it up to be able to qualify, then yes, if you want, we can re-pull credit and see if the things that you did brought your credit up. And typically that can take a little while because it takes 30 days or so say for instance, you have a judgment out on your credit, and you say, well, I'm going to pay that judgment off. It doesn't go up immediately, and it can take, a month or two for your score to go up to be able to qualify for the loan. So.
And the next question probably ties into that a little bit, what you were just discussing in debt consolidation. This person is asking, or they're stating that they recently consolidated their debt. So they're asking, how long should they wait before seeking a pre-approval?
Well, it really depends on what your score is currently. If your score was below the minimum, then it could take a couple of months. It could take 3 months. It really depends on. I would have to look at what items that they consolidated to really see how long it would potentially take. But I would say at least a couple of months.
Yeah, I would say that varies as well. It really depends on what you're comfortable with. And I'm not sure if you touched on how FICOs affect interest rate with us yet, Harold. But it really depends on who the lender is. I'll let you explain that a little bit, Harold. I'm not sure if that's coming up in the next segment or if you went over it already. I'm sorry if I missed it. But it really depends on what you're comfortable with. I can share from my own personal experience that when I applied, I had a debt on my credit report that came off by the time it was time for me to close. So I asked for my credit to be pulled again, just so that my debt to income ratio was more favorable.
Yeah, I mean, it's really situational, like you're saying, Al, and it's really tailored to that borrower. And also, if they're putting less than 20% down, then you want to get your credit score up as high as possible for your mortgage insurance payment. It's really situational, and have to deal with that on a one-on-one basis.
Okay, I think one of these they're asking for if we offer Sony May FHA. I think you just discussed that we offer conventional mortgages. Is that correct?
That is correct.
All right. All right, so we have a couple more questions and then we can move on. If my intentions are to purchase a home for the sake of renting it under my LLC, will Palisades allow me to purchase a home with them being my lender?
Yeah, we can't. You have to be the owner of the home. We can't, our guidelines doesn't allow us to put a loan to be in an LLC. And if you're going to rent it out, that's considered a rental property. And there's certain guidelines that govern rental properties, whereas we take those on a case-by-case basis. But typically, with a rental property is that we can only do a 15-year mortgage, and the rate it's going to be higher than the going 15-year mortgage for a primary residence, and you're going to have to put at least 30% down on a rental property. So I would have to look at the whole ball and wax to see if we're able to do that rental property. But to answer your question, is that no, we can't can't finance a home that's in a LLC or it's going to be put in an LLC.
Okay, I think you just went over some definitions, and someone is asking to please explain what amortization is.
Excuse me? I didn't miss that.
Please explain what an amortization is.
Amortization, okay. So what amortization is that you pay when you pay your mortgage, and certain part of that mortgage is going to interest and certain parts going to principal. So, and what that is that, say for instance, you're paying $1,000 a month, and when you make your payment, maybe in the beginning on a 30-year mortgage, two or 300 going to the principal, and the rest is going to interest. And over time, more goes to principal and less goes to interest. And what that's amortization. So your mortgage payment goes down based upon, your mortgage balance goes down based upon the interest in the interest that you pay and the principal that you pay, and that's considered amortization.
Okay, I'm gonna save, there is one more question in here. I'm gonna save it for after this segment. I think you're gonna go over in the closing process some of this information, but the gentleman is asking at what point should the attorney be involved and what are the typical legal fees? So I think that's part of the closing process if you want to include some time either during or after the segment.
Okay.
All right, so we'll close the questions portion for now, and if you want to proceed, we can do that.
Okay, thank you, Al. So the next part is the most important part, the closing process. So in the closing process, you want to avoid delays and postponement of closing. So you want to be sure that you respond to any of the lender's requests and the settlement company requests immediately, and work closely with your lender and your real estate agent and settlement professional to avoid delays. So if you're in the mortgage process and if we're asking for updated pay stubs or your homeowner's insurance that you need to get for the new home, then you need to do those things very, very quickly, because they can, if you don't, they can cause delays in the process. Now, when it comes to service providers, you have a choice. One of the big things that I think you should do when you're buying a home, your lender is going to do what they call an appraisal on your home. And what that is that, an appraiser is dispatched out to view the home. They typically go in, see how many bedrooms, how many bathrooms, the square footage of the home. And most of that's done behind the scenes after they come in and do the inspection of the home. And what typically an appraisal is that how much a home's selling for in that neighborhood based upon the criteria of the home that you're buying. So if it's a 3-bedroom, 2,000 square feet, 3 bathrooms, 5 bedrooms, they look at typical homes that sell in your neighborhood, and that's how most of your appraised value comes up. But you also want to do what we call a home inspection. And what that is that you get an inspector to come in to inspect your home. And that's more invasive. They come in and they'll get up into the attic and see what's going on up there. They see if there's any cracks in the foundation. So I really encourage people that if you purchase a home and you go into a sales contract to buy that home, you want to do a home inspection. And a home inspection can vary in cost. I know that's going to be a question, is how much a home inspection will cost. And typically it can run from, I would say, from like $600 to $900 in that area. It could be a little bit less, could be a little bit more. But you want to check out any of the reputation of home inspectors that you would use. And also talk to your lender and real estate agent and settlement professional to obtain information. And we can give you some information on some home inspectors that were used by previous previous members to purchase their home, and you're not under no obligation to do that, but we definitely can help you in that area. Another thing you want to do is protect your information, because in this process, you're going to be dealing with different people. So you just want to keep cognizant of anything that may show up in your email, anybody emailing you to do anything. So if you get an email from our settlement company, then most people call me or call to ask, I got an email from this person, are they affiliated with you guys? So just be very mindful of protecting your information, and make sure that you're using a secured system. So in the beginning of the loan buying process, say for instance, you get a pre-approval, we pre-approved you, you submitted the pre-approval to the seller, and you got an accepted offer, and then now you have to go on what we call the loan commitment phase. So what happens is that we'll get a copy of that contract, of signed contract of sale between you and the seller, and we will issue you a commitment. And part of that commitment is what we call a loan estimate. And a loan estimate will be sent to you 3 days prior, 3 days into your loan application. And what that is, that outlines all your closing costs, your mortgage payment, and anything regarding that purchase. And we can't proceed with the commitment until we get that loan estimate back. And then preparing for the closing, approximately 10 to 14 days before scheduling and closing, it's important that you communicate with the lender and real estate and settlement agent. And what we're going to need is homeowner's insurance on that home that you're buying. So what happens is that you're purchasing a home, and we're going to need what we call homeowner's insurance on that home. So 10 to 14 days before we get ready to close, you need to purchase that homeowner's insurance from people like Geico, USA, or whoever you have a relationship with, or if you don't know anyone, you can research homeowners insurance company to obtain homeowners insurance, because that is a requirement before we close on the mortgage. Now, closing disclosure. A closing disclosure is almost like a loan estimate. So a loan estimate is in the beginning of the process. The closing disclosure is at the end of the process. So what a closing disclosure is that it has the final numbers on the purchase transaction. So once that's given and once that's signed, typically that can't change. So once that closing disclosure is signed, it has your rate, mortgage rate on there, it has the loan amount on there, it has your payments and everything, and that will be sent directly to the home buyer to sign prior to closing. So that goes out, and then we cannot close. Once we close that out, once we send that out, you have 3 days. So we send you the closing disclosure. We give you 3 days to you sign it, and then after 3 days, we can go to the mortgage closing. So this is more what I was talking about, is the 3-day closing disclosure. So we deliver that to you, and that has to go 3 days prior to the closing date. If the CD is delivered via email, it's important to acknowledge the receipt of that closing disclosure to avoid delays. If we mail it, then it has to be mailed 7 days prior to the closing. So that allows time for you to get that closing disclosure and review it with your attorney or your real estate agent, just to make sure everything's in line. So the lenders is going to get title insurance, and that's required on all loans, and that's the lender's insurance is based on the loan amount, and that protects the lender and the lender's interest if there's a problem with the title after the loan is closed. You also can purchase a owner's title insurance, and what an owner in title insurance is the owner title insurance protects against adverse matters such as ownership challenges, errors and omissions in deeds, forgeries, undisclosed items, and amongst other things. So do most people get owner's insurance? A few. Most people just purchase the lender's insurance, which is required, and they just use that. You know, if there's some things going on extra, a homeowner may decide to get the owner's title insurance. Well, that concludes our online webinar on the home buying process. I hope all the information that I give was very helpful. And now, at this point, Al is going, I guess, to open up for more questions. Thanks, everyone.
Thank you, Harold. And we do have some questions coming in, and then we'll allow a few minutes to see if any other questions come in as you answer some of these questions. And I didn't catch this, but I guess at what point should they wait before their attorney is involved, and what are typical legal fees?
Well, I would say once you're going to be dealing with a realtor most likely. So your realtor will be advising you, you know, when you're going out looking for homes. And so I would say the attorney is pulled in. It's time for you to get an attorney once you get an accepted offer. So once you get an accepted offer, then you're going to get a purchase contract, and then that's where the attorney comes in reviewing the purchase contract and making sure everything's correct on it. And a typical attorney cost can be anywhere from $700 to $800 up to maybe $1,200. So it really depends, you know, on an attorney. So I would really do your research, and I would get a real estate attorney. You know, a lot of attorneys can do or will do a home buying contract, but you won't one specialize in it. So that's a real estate attorney.
Thank you, Harold. And just to piggyback off that, I had some of the same questions, and this was one of those questions. And typically your real estate agent has a team that they work with, but as Harold stated, you want to do your research. You always want to have a few options to choose from, but that's something that your real estate agent really guides you through. And like I said, they typically have a team that they work with that they feel comfortable with, and I'm sure that they'd refer either that person or refer a few different attorneys for you to use.
Yep.
Give me 1 second. We have this question. I'll read it as it's been entered. Are there licensed home inspectors?
Yes, yes. And that's who you want to get. You want to get a licensed home inspector. And like Al was alluding to earlier, you can talk to your real estate agent they probably have a list of licensed real estate agent, licensed to persons to do that. And also, like we said, you can do your own research, but the real estate agent probably would be the best resource for that.
Thank you. And yeah, same thing with my real estate agent. She provided me a few different attorneys and inspectors to call, and then I got estimates and just kind of did a review of online research to see which one I felt comfortable with, and you go from there. Okay, we'll wait a couple of minutes, but we do have a question that I could probably answer, but I'll leave it to the experts. With the recent events of COVID-19, have lenders and or the PFCU been more reluctant to approve mortgages due to the uncertainty of the way the economy has reopened? In other words, has it made lending more difficult to obtain due to business slowing down?
Well, I mean, it really depends on the individual buying a home. I mean, for us, we're open for business and doing mortgages. I know, we have to do appraisals, and that require an appraiser coming into your home. And certain people are reluctant because of COVID of letting an appraiser come in their home, and also for the closing. You have to sit down with a closer to sign your documents. But, all the social distancing requirements are being adhered to, the PPEs, the mask, and the 6 foot, even more. So, but no, we're definitely doing mortgages.
Okay, maybe give it one more minute in case somebody is typing. That's the last question that I see here. While we wait for any other questions, I want to just say thank you to everyone. Thank you, Harold. Thank you for your questions. As I said earlier, if you think of anything else, and you'll probably have questions along your journey and this experience, please do not hesitate to call us. Give Harold a call. No question is small or large. They're all good questions. Information is going to be the key for you moving forward. So again, thank you. As I stated earlier, in case you joined in after we started, we will send a copy of the presentation by the end of the week. So all the registrants, even the folks who weren't able to make it today. So if you know anyone that was supposed to be on that maybe in person, just let them know they are getting a copy of the presentation. Included in that email will be questions and answers from today. So we'll compile all the questions and the answers to those questions, and we'll email those to everyone as well.
Yeah, thank you, everyone. And like I said, the credit score is the most vital part of the home buying process. So keep cognizant of paying everything on time. And like I said, you can check your credit report, credit score without getting a hard pull, maybe to, the annualcreditreport.com or Experian. So you can research that and see what's best for you, and you can kind of get a handle on things prior to, starting the process. You can know what your score is, and if you get your score and you're gonna call me or send me an email, let me know, hey, this is my score, then and I can kind of guide you in that.
Okay, for updates on rates, I know there was a question in here about rates. So just to check the daily rate, you can go on our website, www.palisadesfcu.org, and go into the rate section. There should be a tab at the top or a link that'll take you to the rate section, and then just choose the mortgage option, and you can see the updated rates. Like I said, information is the key in this journey. So if you think of anything, please reach out to us. And I think that's all we have for today, Harold.
All right.
I don't see any other questions in here. If you think of anything, call us.
All right. Thanks, everyone.
All right. Thank you, everyone.